Hello again, friends. I hope you're all doing well and managed to make bank over this last week of trading. Today's video is going to revisit one of my favorite stocks on the market, that of course being clean energy fuels. Recently I did a video that looked at the financials of clean energy fuels, ticker symbol CLNE, and particularly looked at what could come from the Amazon deal. While this was a significant deal moving forward, it's important that shareholders and prospective investors realize that Amazon is only one of the companies CLNE is doing big business with. However, Amazon appears to be the only one that has been offered a significant equity stake in the business. In this video, I want to have a look at some of the recent moves the share price has had this past week and discuss the catalysts for this movement. Aside from that, I also want to talk about clean energy fuels' future potential and why I think it is well placed to emerge as a powerhouse in the energy sector. So anyway, let's get into it. So looking at Friday's trading, we can see it was a positive day for CLNE, rising about 0.75% through the session to finish at $9.16 over here. And then in aftermarket trade, it kind of maintained that level and stayed around the $9.13 mark. So leveled off in a pretty stable position. However, as can be seen on the 5-day chart, which is missing Monday's trade for the week, CLNE has experienced a downward trend and currently down 11% over the past 5 trading days. So you can see from last Friday, Tuesday's trade coming in here, Wednesday, Thursday, and then there was a little bit of a bump up on Friday. So it's declined about 11% over the last 5 trading days. Now I want you to keep in mind Tuesday the 6th, as this is a point where we start to see a bit of a significant drop in the share price, and one of the things I want to discuss in this video. So we're looking at this drop off that occurs over here. There's a drop off there. And just for some perspective, here is the last 6-month chart where we can see while the price has been declining lately in this period here, the price is still pretty close to where it was 6 months ago. It's still a little bit down, but it's not too far off that mark. On the one hand, this is disappointing, especially given the cache of good news that has come CLNE's way in this period, particularly the news around the Amazon deal and potentially the equity stake in the company that could come about from it. But we will comment on this further shortly. But it's just nice to point out that the share price is still not too far off where it was about 6 months ago, even though we'd probably like to see it a little bit higher. Now, looking at this 1-hour candlestick chart for the last 2 weeks of trade in relation to the RSI, so this indicator down the bottom, relative strength index, we can see that this downward movement has been taking place earlier than the Tuesday, which is kind of signified by this sharp drop here. Just keep in mind that I trade from Australia, so the Tuesday in the USA is actually Wednesday here, so it doesn't quite align with my dates down here, unfortunately. So that's the candlestick we're looking at. So what that sort of shows, that candlestick in relation to this drop below here, when it falls below 30 in the RSI, it means that the share has reached a point where it has been oversold. And that's kind of been the catalyst that has driven the bounce up there. And probably what looks more dramatic there, that's kind of that upward movement we're seeing over here in the share price, as it's kind of been identified as being oversold. So it's a bit of a cyclical buying opportunity, I suppose you could say. Anyway, like the main conclusion I want to sort of draw from that is that the RSI and the share price are kind of behaving in a normal manner. So it's no drastic price changes are expected based on this sort of data. That, that can always happen, but based on regular market flows and the way the RSI is performing, we shouldn't see any dramatic changes to the price. Now, adding the weighted moving average and volume to the chart, we can see that the following patch of high trade back in mid-June, down here, where the moving averages cross over. So we see this like crossing over the moving averages, those blue, light blue and navy lines. These are the indicators for 20, 50 and 100. Anyway, so those moving averages crossed over, but however, since then they have recrossed and kind of normalized and generally reflect the 2 to 3 week decline stock price has been experiencing. What is particularly interesting is looking at the volume of trade compared to what was happening in that highly traded period of June. It has actually slowly dropped off. So you can see it was quite high in this section here. I've already circled, but then there is this definite drop off along here. What this sort of suggests is that the retail interest has significantly dropped off in the stock. Also, there is one little hourly red column from Tuesday's trade, That's this one here. Keeping in mind that it is the Wednesday on my chart, so don't get too confused about it, but that's the opening of Tuesday's trade. Anyway, this red volume tower is the market reacting to the event that triggered a sell-off, which has carried through much of the week. That event being an announcement by Hyzon regarding a future product that they are bringing to the market, which will directly compete with clean energy fuels offerings. And we'll talk about that very shortly. Interestingly, CLNE is still in the top 20 most talked about stocks on Reddit. However, it does appear to be trending down. This suggests that there is a decline in interest among the retail investors, like we were sort of pointing out on that other chart as well for this stock, which I think is a trend which is becoming increasingly prevalent with other meme stocks, as it seems almost every day a new stock catches the imagination of investors. Therefore, there'll be a bit of a spike in interest, and then there's a steady decline as people move on to new stocks, which is a bit of a threat to people trying to really rally behind some of these stocks. So it can be challenging to pick the stocks which are best to actually hold long if the investing crowd is constantly kind of changing what their interest is. And that's one of the dangers of getting caught up in some of the meme stock rallies, I suppose. Now, moving on to the catalyst I was talking about of that sell-off on Tuesday regarding Hyzon, I'm just going to read a segment from a Motley Fool article dramatically titled Why Clean Energy Fuels is Crashing This Week, which came out on Thursday. But those days are long in the rearview mirror, and it seems that the stock's decline this week is a sign of the market continuing to send the stock back down to more reasonable levels. I was talking about the retail investing sentiment moving away from clean energy fuels. The other factor contributing to the sell-off was an announcement from Hyzon, the self-proclaimed leading hydrogen fuel cell heavy vehicle company, self-proclaimed, emphasis there, regarding its partnership with Chart Industries, scheduled to go public with the SPAC Decarbonisation Plus acquisition. Hyzon announced on Tuesday that it and Chart Industries are collaborating to develop and produce a liquid hydrogen-powered heavy-duty commercial vehicle with a range of up to 1,000 miles. Addressing the merits of the joint endeavour, Hyzon's CEO Craig Knight stated, "The extended range would significantly accelerate the adoption of hydrogen fuel cells, basically, fuel cell EV over the road transport solutions, given the reduced infrastructure needs and increased refueling hub utilisation." On the day, Hyzon's announcement, shares of clean energy fuels closed more than 5% lower than they were the previous trading day. Now, Hyzon's forecasting delivery of 85 vehicles and revenue of 37 million in 2021. And Hyzon estimates vehicle deliveries will soar to 17,000 in 2025 on revenue of 3.3 billion. To me, which I think is a very, very lofty ambition, that one. So this sort of vehicle that Hyzon is planning would pose a market threat to clean energy fuels network if properly realised. However, and the article does go on to state later on that the ambitions of Hyzon are just that, quite ambitious, and casted serious doubt on how well they will be able to deliver on these goals. So while Hyzon is shaping up to pose a direct threat to clean energy fuels, it's not one that is immediate or too serious at this stage. However, the market did react negatively to clean energy fuels as a result of this. I suppose just to make my point a little bit anecdotally, currently Elon Musk wants to send people to Mars through SpaceX. I'm going to start my own space company. We will name it Sean's Out of This World, Sean's World, and send people to Jupiter. It's further than Mars, therefore my new company is posing a threat to SpaceX. My claims have not been backed up, yet I'm still pursuing a rival business solution. Same sort of thing that's happening here with Hyzon and clean energy fuels. Interestingly, Hyzon's business proposition also poses a business threat to other established companies such as Tesla with their upcoming electric semi-truck. So I hope that puts Hyzon's threat a little into perspective. Hyzon is an upstart. Clean Energy and Tesla, for that matter, are more established companies. So, the kind of advantage already sits with those established businesses. But don't discredit Hyzon's efforts. If they are able to deliver on these goals, it will pose a significant threat. But at this point, they're just ambitions. There's nothing too concrete to say it's going to eventuate. So this is another extract from an article, this time from Forbes, that I want to share part with you. This was published on Wednesday and is titled, "Is Clean Energy Fuel Stock Worth a Look After the Recent Sell-Off?" And I'll link both these articles in the description. So the bit I want to read to you. So while about 40% of clean energy fuels gas sold in 2020 came from RNG, This is the product that Jeff Bezos and Amazon are really interested in. It is targeting a 100% mix of RNG at all its fuel stations within the next 5 years. Major corporations have also shown a lot of interest in the RNG space, with Clean Energy Fuels recently signing deals to build renewable natural gas facilities and infrastructure with energy giants Total and BP. So they're working with a lot of other big companies here. While RNG is predominantly in the transportation sector, powering heavy vehicles, it could eventually be used for electricity generation and even as a raw material for hydrogen production, giving it a massive addressable market. The outlook for Clean Energy Fuels financials is also looking better. Sales are projected to grow by about 10% each year over 2021 and 2022, per consensus estimates, with the company also likely to break even in 2022. Now, although 5x plus forward revenue multiple is somewhat high, the company's leading position in the renewable natural gas space, the sizable market potential, regulatory tailwinds under the Biden administration, and the recent correction make the stock worth a look. So, big thing here, so aside from fueling trucks, RNG actually has the potential for so much more. It can be used for electricity generation and can be also adopted as a raw material for hydrogen production, as pointed out in this article. This actually gives Clean Energy Fuels the scope to develop into a much bigger company, and if they are projected to become sustainably profitable from now going forward, these are other avenues that they could pursue expansion in. And the exciting thing here is this makes the potential for the growth of CLNE huge. And now this brings us back to the Amazon deal. In my last video about Clean Energy Fuels, we discussed the option that Amazon has to purchase a 20% stake in the company if they spend $500 million on fuels, which they've already actually been purchasing for a few years. I discussed how that could actually take some time to achieve, which will give Clean Energy Fuels more time to develop further as a company. I think one of the things Amazon will be looking at is if CLNE is looking to expand what they do with their RNG offerings, aka moving into something maybe like electricity generation. Like, Amazon is a rapidly growing conglomerate and needs to find new ways to grow its business. If they want to keep being the growth company that they are known for, they need to find other areas to expand into. So for them, if they see RNG as being a potential vehicle to become a major player in next generation power and fuel supply, I think we will see them exercise the option of buying their 20% stake in the company. That means that the $13.72 share price that Amazon will buy into the company at would be an absolute bargain given the potential growth CLNE can have by moving into other energy areas. And furthermore, it makes the current $9.16 share price an absolute steal, and you should be getting on it. Now, I'm obviously quite bullish on CLNE and intend to accrue the stock further and hold for some time to come. This is a company, I think, with huge potential that is starting to turn sustainably profitable. So this current low share value does not bother me too much, but instead presents an opportunity to increase my position at a bit of a discount. If I hopefully can get some more funds available in my account this week, I probably will be looking to do that. Anyway, that's all I have for this video. I hope you enjoyed it. If so, please remember to leave a like. Also consider subscribing to the channel for further updates. I aim to post stock related videos pretty much every day and have really appreciated the support I have been getting for these videos so far. Until next time, guys, take care. Cheers.